All right, let's look at the data. Today, we are breaking down the market anomaly that is Trump media. We're going to deconstruct this massive divergence between its multi-billion-dollar ticker price and, well, its actual business fundamentals. And look, this is not about politics, this is about the numbers. And right now, the numbers are telling a fascinating story.
Right, let's get straight into the mechanics of this because the data presents a puzzle that is pure market structure. You've got this huge, multi-billion-dollar valuation sitting right on top of a massive net loss. This isn't about reading headlines. It's about a fundamental discrepancy that we, as analysts, have to pick apart.
And here it is. This is the core of the anomaly. FactSet data shows the company is trading at over 1,200 times its annual revenue. I mean, a multiple like that is an extreme outlier. It's a flashing red signal that your conventional valuation metrics, they've been completely thrown out the window here. Something else is driving this price action. So to make sense of this, here's how we're going to break it down. We'll start with the stock's wild, volatile history. Then we'll pop the hood and look at the financials. After that, we'll compare the platform to its price, see how this echoes in the meme coin space, and finally, lay out the dueling bull and bear cases. Okay, first up, let's map out the volatility. The entire story of DJT's price action is just one of these extreme peaks and valleys. And this isn't just random noise. The volatility itself is a critical data point we need to analyze. The whole journey kicks off with this massive, short squeeze-style rally right on the SPAC merger announcement. It rockets up, peaks at a closing all-time high in March 2022, and then it just bleeds out. By late 2025, the price had collapsed. You know, this isn't typical price discovery. This is pure event-driven mania. Now, just look at the raw numbers on this slide for a second. During that peak frenzy, you had intraday highs hitting $175 on massive volume. That's the sheer scale of the initial speculative wave we're talking about. It really set the entire tone for this stock's life on the public market. All right, let's pivot from the stock price to the business itself. What are the financials as of Q3 2025 actually telling us? This is where we analyze the engine, not just the flashy paint job. For the third quarter of 2025, Trump Media reported total revenue of just under $1 million. And the source material is clear, this comes primarily from advertising. Now, during that same 3-month period, the company reported a net loss of over $54 million. And get this, that loss widened significantly from the $19.2 million loss it posted in the same quarter of the prior year. That is negative cash flow on a massive scale relative to its revenue. And when you dig a little deeper into the financials, you see a few critical flags. First, revenue is actually declining year over year. A huge chunk of the losses, over $20 million, is from legal expenses. Plus, the company doesn't report standard user metrics, which for a social media play is a major transparency issue. And now they're pivoting to a Bitcoin-related income strategy. You know, a social media company's value is often tied directly to its user base. So let's analyze the available data. How does Truth Social's user engagement really stack up against established competitors? This is a key part of any institutional due diligence. The numbers here show a massive divergence in scale. If you look at monthly active users, or MAUs, Truth Social is at an estimated 6.3 million globally, versus X at roughly 600 million. And that gap, it's even more pronounced in the critical US market. And this chart here, this puts the daily engagement numbers in stark relief. And that's the metric that actually drives ad revenue. With roughly 355,000 US daily active users compared to X's nearly 132 million, I mean, these platforms are operating in completely different universes. So the speculative fervor we're seeing in DJT stock, it isn't happening in a vacuum. It's actually mirrored in the performance of related, though totally unaffiliated, meme coins. It provides a really useful parallel for understanding this type of market psychology. This blunt assessment from the source material really captures the sentiment from a purely fundamental perspective. When an asset has no underlying cash flow, no real utility, its price is driven entirely by speculation, period. And the data absolutely backs this up. The year-to-date performance for 2025 shows just staggering losses for these digital coins. The Melania-themed coin is down over 96%. This is what happens when speculative narratives collapse without any fundamentals to provide a floor. So how in the world do we reconcile the sky-high valuation with these absolutely brutal fundamentals? The market is telling two completely different stories here. Let's break down the bull and the bear cases that we can derive from the source material. Okay, the bear case, as articulated in some user commentary, argues that the stock has pretty much detached from its identity as a share of a business. Instead, it's being treated as a speculative asset that's based on the greater fool theory. The idea that you can profit as long as there's someone else, a greater fool, willing to pay even more. But then there's a different perspective, citing the legendary trader Ed Sikota, which points to market psychology. This view suggests that for some people in this trade, the motivation isn't really a financial return in the traditional sense. Their participation might be driven by community, by identity, or other emotional factors that a financial statement just can't capture. So, the crucial point is this division, right? The bear case is anchored in hard data. Massive losses, minimal revenue, weak user metrics, and high legal costs. The speculative bull case, meanwhile, it just ignores all that data and focuses on things like short-term technical cycles and potential future momentum. Ultimately, the DJT story forces us to ask a much bigger question about the nature of valuation itself. This isn't just about one company. It's a fascinating case study in how brand loyalty and political identity can create market dynamics that just defy traditional financial analysis. And just a final but very important reminder. This analysis is for educational purposes only. It's based on public data as of November 2025, and this market is extremely volatile. This is not financial advice. You absolutely have to do your own due diligence. We are tracking these flows in real time, so while you analyze the next move, check out the tools in the description. You can sign up for Public to get $20 in free assets, check Webull for that BTC promo, or look into NVDA on Moomoo. All the links are down below. Like and subscribe for more deep dive analysis. Stay disciplined, stay liquid.